Good afternoon, Alex Colin. Welcome to August 4th, 2022, your weekly installment of the GoNoGo Show. How are you doing, my friend?
Fabulous. Excited to get to it.
Yeah, it's the dog days of summer. A lot of heat outside, little freezing temperatures in the stock market. Let's dive in to the asset class heat map.
Yep.
Tell us what's happening from a top-down perspective, Alex.
Yeah, absolutely. So let me just put the S&P in here. We were looking at something else a second ago. But we are seeing continuation of the S&P Go trend. I think that was the story for the last week or so. Once we were able to get out of the no-go and we saw the uncertainty with the amber bars and then the aqua and then the amber. Once we then went back to the strong go bars, we've really taken off and we see that continue. Treasury bond prices also able to hang on to their go trend. We had one weaker bar, a couple of bars here showing the aqua colors, but still a weak go form. Commodities, as we know, rolled over several weeks ago, and that continues to be the case. And we've got the dollar hanging in there, the go trend persisting in the dollar.
So for everybody who is new to the GoNoGo Show, what we're looking at are, on a daily basis, the absolute trends of these four asset classes, just to see what's going on, just comparing the broad asset classes to understand the nature of this market. And so we obviously can see some of those important intermarket relationships playing out. Bond buying, meaning the Treasury rates, the yields are coming down. That cooling period has certainly helped become a tailwind for U.S. equities. Obviously, commodities also rolling over months ago into that strong no-go condition. So, Alex, let's dive into the S&P 500 itself. Let's look at the price action of today's market. As we are coming into that resistance zone that we talked about last week in this bear market rally. Let's talk a little bit about what we're seeing right now. And as responsible technicians, we'll play through both scenarios and what we might see on the chart in terms of continued strength in this go trend or the potential for resistance here with some overhead supply. What are you seeing on the chart of the S&P 500?
I think the way I like to look at it is first, I put a lot of value in the weight of the evidence. So for me, this is a strong go trend, oscillator having ridden the zero line here as we were seeing a base in prices, now solidly in positive territory. So we are in a strong go trend. And that's how my market bias would be, that on a daily basis, we're in a strong go trend. But I also don't want to ignore the fact that if you look at in the context of prior moves, there is some overhead supply here, as you just mentioned. So I'll keep that in mind, but I will, give my sort of the weight of the evidence to me tells us we're in a go trend. We've got positive momentum. So that's where my bias is if I was then looking to set up trades on a shorter time frame. But I just keep in mind the context of prior highs.
Absolutely. So as responsible traders and investors, what we might want to do at this point to get an understanding of where price direction is headed is to look at the intraday chart. Why don't we even just pull up something as short as a 15-minute chart to see how we're doing against this resistance area. Obviously, with a clean price chart, you can see as more classical technical analysis driven approach in pattern recognition, areas of support and resistance. Tell us what you're seeing intraday as we meet with that overhead supply.
Yeah, well, today you can see that we were right up against that resistance at the end of yesterday. Yesterday's 15-minute bar that closed the session brought us back below that resistance. And then today we've sort of struggled. We've gone sideways. We've been chopped around a little bit, and we haven't gone higher. So we've been moving mostly sideways today. If you look at the short-term perspective, these are 15-minute bars. And we did notice that the oscillator struggled with the zero line. So now it's right back at the zero line, and it's holding. Mm-hmm. So this is a decent sign if we were then able to regain go bars with the oscillator now perhaps going back into positive territory. We'd expect an attack at this resistance level again. But you can see how this resistance level from the larger time frame chart is really having an impact.
Absolutely. And so, Alex, let's just review quickly what we're seeing in that lower panel, just to help our audience understand the complementary nature of momentum, volume, volatility, what we're looking for in terms of confirmation and divergence.
Yeah. So what we did with the oscillator, much like we did with the trend indicator that colors the price bars, is we took some of the most robust, most tested and well-used momentum concepts and indicators and blended them into one oscillator that we felt would give us a complete view of the momentum associated with any price move. So when all of the inputs to our oscillator are in their neutral territory, if you think about something like the RSI going between 30 and 70, that's the neutral level for RSI. So if all of our inputs are in the neutral territory, we're going to see our oscillator at zero. And what gets interesting is then when it remains at zero for an extended period of time, you'll see this grid build, and that's telling us that there's not a lot of directional pull. There's uncertainty in terms of what side momentum is going to be on. Is it going to be positive or is it going to be negative? What we expect to see when a trend is healthy is momentum to stay on the side of the trend. So if we are in a go trend, we expect positive momentum. And so when the oscillator comes back and struggles to hold the zero line, that's a bit of a concern. We're now, as I said, riding the zero line, and we'll look to see if momentum can come back in the direction of the most recent trend, which is, of course, a go trend.
Absolutely. So in terms of situational analysis, if we were to break above this resistance area, it's a great opportunity to add to long positions. If we jump back to that daily chart, we'd be able to see that a trend continuation icon would likely appear with that resurgence of momentum. Right now, we've retraced from that overbought level in the momentum oscillator, telling us that there was an intermediate high here as we approached that resistance area. Alex, responsible technical analysis. When in doubt, zoom out. Let's see this S&P 500 chart on the weekly basis, just so that we're aware of what the long-term trend is telling us.
So this is exactly the same methodology we're going to use to read this chart. So we want to highlight that, of course, with technical analysis, you can use it in a fractal way. And if you zoom out to this weekly chart, we're going to look for the same things. So when this go trend was in place and healthy, we see the oscillator above and finding support at zero. When that wasn't able to hold, that was a concern. And now we were below zero and now finding resistance at zero as the no-go took hold. And now we are making lower lows and lower highs, and the oscillator is at zero again, testing it from below as we are running up against the resistance level that we see here on the chart that's carried over from that daily. So a very important moment on the weekly. If we cannot break above this resistance, if we cannot get the oscillator above zero, we may well see price roll over and make a leg lower. So that all factors into our analysis when we're looking at the daily chart.
Absolutely. And we're not here to tell you what your trading time frame should be or how aggressive your risk exposure needs to be, but it's important to look at multiple time frames to understand the context in which we are trading. So as a great deep dive on the S&P 500 on U.S. equities, let's take a look at some of those macro forces that are driving today's market, including the TNX, so the long-term yield 10-year treasuries. We've taken a look at this on the daily basis, first and foremost, just to see where we are sort of on the intermediate term. Looks like a no-go trend to me.
Absolutely, a no-go trend, and we saw the strength of that trend pick up on these strong purple bars. We saw confirmation from the oscillator as it got rejected by the zero line. That's what gave us the circle here, the red no-go trend continuation icon. And what looks to be a lower high now in place as we've rallied the last couple of days, but then gone lower today. So this could be a new lower high on the daily, which would be nice for equity investors, see a bit of relief as rates continue to cool off.
And if we were to bounce this out to a very long-term perspective, perhaps a quarterly chart, looking over many decades, perhaps our entire lifespan, we start to see the very long-term nature of the downward trend in Treasury rates. Obviously, the rapid moves off the COVID lows mean reverting right to that trend line. We've seen a lot of volatility in interest rates. Where are we at right now on this from this quarterly perspective, Alex?
We're at an incredible inflection point. As you can see, we are flirting with breaking above this multi-decade downward sloping resistance line. And the rally off those COVID lows has seen the color change from the GoNoGo trend indicator first to amber goldfish bars. And now this quarter is currently painting an aqua go color as we are just above resistance from this downward sloping trend line. Now, interestingly, oscillator at zero, but coming at zero from slightly above it. So a very important moment. Will we find support on the oscillator at zero, which could give rates enough momentum to move higher above and away from this resistance line? If GoNoGo oscillator, if the momentum turns negative and gets back below, we may well see this resistance level hold, in fact, as we go back below it.
Yeah. First period of the third quarter of this year showed a lot of strength in rates. We've seen that cooling off here the last week of July and into August. So again, this is a quarterly chart of 10-year Treasury yields. So we're looking at a very long-term perspective, and that data comes in pretty slowly to this chart. So keeping in mind that we're at that inflection point, this is a big influence for where we're going to see U.S. equities play out. Alex, let's look at another macro force. You had pulled into our weekly newsletter on Monday morning for all subscribers just to look at gasoline futures and what we're seeing in the GASO ticker in terms of a cooling off on those commodities prices.
Yeah, and this is what we were talking about in terms of, perhaps wondering why we're seeing this rotation back into equities and back into growth equities. Well, investors are feeling a little bit of relief, first from rates cooling off, but also from real world relief from things like gas prices. I mean, a couple of months ago, we were seeing incredible prices at the pump with gas on a national average, well over, I think, $5. And now we've seen how that has come off quite considerably over the last couple of months. And in fact, gasoline prices are in a strong no-go, and seeing continuation icons as the zero line continues to act as resistance, as it has since it first crossed below back in June. So, why are people spending more money this summer? Perhaps a couple of these things combined. But if we are looking at a continuation of a no-go trend in gas prices, a continuation of rates cooling off, especially in the short to medium term, then perhaps we will see continued strength in equities over the next few months.
Yep. The market is a leading economic indicator, not the other way around. So by the time the Federal Reserve Board gets around to talking about whether or not this was stagflation or recession, markets are sniffing out what can already be seen in price action. So let's look at another big macro force affecting markets, the U.S. dollar. As we check in every week, it's been a surprise to a lot of Wall Street analysts that we had continued higher as this long duration go trend really pulled us into territory we haven't seen in over 20 years.
Yeah.
The last several weeks, we've seen some cooling off. And I noticed, Alex, that the GoNoGo oscillator is below zero on heavy volume. So talk to us a little bit on the daily basis, what you're seeing in the US dollar.
Yeah, we got excited the other day planning our Europe trip and seeing that it was actually at 0.99. So I know we hit parity between the dollar and the euro. Mm-hmm. We're going in a couple of weeks, and that's great for us. But we are seeing some cracks in that trend, as you said, with the oscillator moving below zero on heavy volume. Mm-hmm. So we've seen quite a considerable correction after seeing these counter trend correction arrows here at the highs. We look towards the oscillator holding the zero line as price corrected, but it wasn't able to do so, breaking out of a squeeze into negative territory on heavy volume. Now, mm-hmm. that happened before here, and it led to an extended consolidation and correction as we saw a series of amber bars. We haven't seen that yet, but if the oscillator stays below zero for much longer, we'd expect perhaps some color change in the GoNoGo trend indicator in the price panel. But if we can get back and above zero, who knows, maybe the dollar strength can continue. Certainly at the moment, the weight of the evidence suggests that on a pure price basis, we're still in a go trend.
Absolutely. No, thank you for that, Alex. And so let's turn our eye to the S&P 500, understanding these macro forces at play. Let's look at our sector groups relative to the S&P 500, relative to that benchmark. We're going to look at a GoNoGo cross-asset heat map. That's just going to be the ratio of each sector to the index as a benchmark. Let's talk about what the leadership and outperformance is coming from, Alex.
Yeah, and we've noted this now over the last couple of weeks, but the rotation that we've been talking about into the more growth sectors seems to be holding and in fact strengthening as we move through this week. These are the top two sectors here. We've got technology and discretionary, and you can see that they are the outperformers. This is what's leading the market higher. It's the growth sectors, not so much the value sectors that we've been talking about up to this point this year. Things like utilities and staples, those were, and healthcare, they were giving us outperformance for much of the year. But now we've seen this rotation into technology and discretionary. Interesting to see industrials coming back. That's a healthy sign, as perhaps the economy starts to gain some steam as well. But the other thing that we've been talking about lately is what's going on with communications. People expect communications to be part of the trio of growth sectors, but this is why we don't want to predict. We don't want to just load up on communications because it's a growth sector. The rotation we're seeing is really only in technology and discretionary at the moment.
Absolutely. Another way that we've looked at the markets with a lot of the tactical asset allocation shops that use GoNoGo charts on an institutional basis is just with the Morningstar 9 style boxes. And we saw the same rotation moving into large cap, mid cap, and even some small cap growth sectors of the style boxes. And so when we come back to this sector RelMap and we see leadership in the S&P 500's new Go trend on the daily basis, we're seeing leadership back in those growth equity sectors that were the favorites of 2020 and 2021. So, Alex, let's dive into the consumer discretionary sector for just a second. We can pull up a ratio of XLY to SPY on a standard GoNoGo chart. We can see that price action on a relative basis, just looking at the ratio of that sector group. What are you seeing in terms of the relative outperformance? Keep in mind the chart of the S&P 500 has this same rounded bottom and recent breakout. So when we look for the leadership in that directional change at the index level, we want to own where we want to own strength, or as we like to say, fish where the fish are.
Yeah.
Talk to us a little bit about consumer discretionary here.
Yeah. So on the surface of it, it might look like a very similar kind of chart, but what strikes me is that we're above the resistance from early June on this chart. So the outperformance in terms of the ratio of discretionary to the S&P is a little ahead in that we're making higher highs here and then again here and higher lows above the resistance from this basing period. So, we could see a little bit more strength perhaps as we come up against we have to deal with the supply from over here on the chart. But certainly at the moment, some strength. We found support at 0. We got a Go trend continuation icon. We've got strong blue bars. So discretionary sector relative to the S&P, you can easily see the outperformance here.
Absolutely. And of course, when we look into the largest holdings of the consumer discretionary sector, we see things like Amazon and Tesla, but also Home Depot, Lowe's, even McDonald's Corporation is in there. Let's take a look at the chart of Tesla on an absolute basis. I know we've got some earnings reporting. We've got a lot of speculation about the stories being told. What are you seeing from a price action perspective, Alex?
Yeah, we're just seeing strength. Similar to that ratio chart, Tesla broke above the highs from the consolidation period here. That's why we're seeing that outperformance to the S&P. The S&P is struggling right now to move higher than those areas of resistance from earlier in the chart. Tesla is above that already. And in fact, if you look at my cursor, you can see that we found support at that level. So it was resistance, now support. That's our old favorite concept of polarity. So now we've found support and we're moving higher with Tesla and on high volume. And I know that we're overbought at the moment, but we know plenty of people that buy overbought levels, right? Buying strength. Absolutely. when you're seeing a trend take hold. Now, we may see that cool off a little bit. We might see price come back, but we are in a very strong move at the moment when we look at Tesla.
Absolutely. We had a great conversation with European seasonality expert, Dimitri Speck, and he talked a lot about luxury goods, particularly companies like Louis Vuitton and some of those upper echelon firms, also in the consumer discretionary sector. So, Alex, let's pull up a chart of Louis Vuitton. LVMUY is the ticker, and let's see if we can spot strength in this Go trend as well.
Yeah, I mean we're gonna try to stay away from the stores in Paris, but yeah, if we end up
Your
there,
vacation just got twice as expensive, my friend.
yeah.
I apologize.
Well, look, the dollar strength is helping us, but yeah, I mean, a strong chart. Again, you can see the same things. You know how to read these charts by now. We're seeing a strong go trend, oscillators above zero. We saw it break out of a couple of squeezes on heavy volume when this move first took hold, and now we see it going from strength to strength. This counter trend correction arrow does at this point did warn us that perhaps we might struggle to go higher in the short term, but we've raced back up to that high, and we'll see where we go from here. But we're up well over 1% today, so things looking good there for that luxury retailer.
The thing that really jumps off this chart to me, if you connected a long-term downtrend line from that amber high in March to where we are right here in mid-July, the break of the downtrend line happens at the exact same moment that we see the trend change. There's a confluence of all the signals, and as responsible technical analysts,
heavy volume.
Yeah, exactly. We see all of the weight of the evidence apply at the exact same moment, which really puts the wind in our sails. And responsible technical analysis is the process of looking at the weight of the evidence. So with a very simple chart in the way that we're seeing it here on this GoNoGo chart, we can see all of the trend conditions just represented in those colors. That makes it very simple to do more of our classical approach and identify patterns and resistance areas. And then we have that single panel on the bottom that gives us the confirmation of volume, volatility squeezes, and of course momentum, all coming in our favor. Just a great case study, I think, to look at in terms of luxury goods outperforming even in this inflationary environment we see for global economics. Alex, as we wrap up today's show, and I know we only have a couple minutes left, let's turn our eye to the chart of Bitcoin. And we can look at this on a daily basis to begin with. We're seeing several days of some strength and confirmation this week that the Go trend is continuing, but we certainly have not taken off to the races. What are you seeing in terms of that oscillation around the zero line?
It looks like a chart trying to make up its mind still to me, and I'm going to side with bullish price action at the moment, because that's what the charts tell me, that over the last couple of weeks we've seen mostly go colored bars, and until that changes, then I'm going to be of the impression that we are in a slightly bullish environment for Bitcoin. It is struggling, as you said, to take off, and we're looking at the way that the oscillator has really struggled to get too far away from the zero line, but so far has found support at the zero line, and we're there again now as price has cooled off over the last several trading sessions. We're at zero again. We want to see that hold of support. If we can move back into positive territory, perhaps we'll see that be enough to really kick on and see price move higher. But that's where I am at the moment, I suppose, with Bitcoin.
Absolutely. And so if we jump this out to a weekly basis, now keep in mind, cryptocurrencies are trading 24 hours a day, 7 days a week. A weekly chart of a cryptocurrency is actually a lot more trading data than we would see in equities. Looks very similar to me, Alex, as the technology sector ETF chart, or even the NASDAQ or the S&P. When you look at this on a weekly basis, we're still biased to the downside. We're still in no-go conditions, albeit on the weaker form, struggling to reach that zero line on the GoNoGo oscillator to show us momentum turning in the direction of the bulls.
Absolutely, yeah. I'm on the daily. Would be slightly biased to the Go trend, but on the weekly, larger time frame perspective, certainly the weight of the evidence suggests a weak no-go. So we'll look to see what happens here as the oscillator gets up to test that zero line.
Absolutely. Alex, as always, it's a pleasure to talk markets with you. Pleasure to go through these GoNoGo charts. For everybody who is watching, thanks so much for joining us. If you are on YouTube watching this in replay, make sure you also download the StockChartsTV.com app. You can carry this show and many other great analysts around with you wherever you take your mobile device. And for those of you who caught us at the Money Show on Monday this week, we appreciate all of your attendance and the feedback. Great educational session. We look forward to doing many more of those. But we will see you next week, StockCharts TV, Thursday afternoon, 3:30 Eastern Time, every Thursday. Thanks so much. Be well. Take care. See you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.